But let's focus in on Marico. Saugata Gupta, who's the Managing Director and CEO, joins in to talk about the numbers. And Mr. Gupta, strong volume growth, but what is the view on whether or not this is sustainable?
So I think as far as volume growth is concerned, our endeavor was to deliver 8 to 10% over the FY17. In one or two cases, yes, there was a low base. But I think what we are trying to do is ensuring that we invest a significant portion of our gains, which are their input costs, into pricing and innovation to drive volume growth and market share gains. And I believe that, yes, if the consumption story pans out, especially in the second half of the year, post a good monsoon, I think the volume growths should be able to deliver. We should be able to deliver 8 to 10% next year.
Saugata, the price cut of 6% did weigh in on the top line. Firstly, what's the increase in demand that you witnessed on account of this? And are there any more price cuts that we can expect?
So we took one in January and one in April. There were 6% each in Parachute. The reason we have done it is because we believe that especially in rural, in a lot of states where there has been 2 consecutive years of drought, I think we need to provide value to the consumer and have a pricing which is aggressive so that we don't lose to unorganized and lose market share. But I think the input costs have bottomed out. So I don't see any further price cuts. In fact, perhaps there is a case in the second half of the year for some minor price increases that will happen because I think towards the second half, the input costs in most of the items could go up.
So how well prepared are you for any rebound in the input costs? Will you be able to maintain your margin expansion then?
See, our philosophy, as I said, is as far as pricing is concerned, is to ensure that we provide value to the consumer subject to a threshold level of margins and continue to maximize volume growth and market share gain. So yes, what happens during inflationary times is we are actually relatively more competitive because we don't pass everything to the consumer compared to some of the local and unorganized players who pass on everything to the consumer. So I would say that yes, we would like to maintain a threshold level of margins, but especially in the second half, I don't see significant margin expansion. There could be certain margin expansion in the first quarter or so.
Right. And in the first quarter, that's expected to remain soft, especially in the drought-hit areas of the country, such as the state of Maharashtra. So in which areas can we expect a slowdown in terms of both volumes as well as margins from you?
I think, as I said, that there could be, obviously, because of deflationary pressure, lower value growth. But our attempt will be to ensure that we continue to deliver at least 8% volume growth.
And rural has been a bit of a pain point for you. So how has that shaped up this quarter?
So this time I think rural was a little subdued. We grew only 3% value in rural and around 6.5% in volume in rural. We expect that consumption pressures to be around there at least till August, September. If the rains are good, I think it will start picking up hopefully by August, September.
And what about the ad spends? Because they've increased a good 30% plus. What's the reason for the same? And is this trend going to continue?
So sometimes A&P spends, you have to look at from an annualized basis because depending on an innovation program, sometimes A&P gets, A&P spends get jacked up in a particular quarter. Having said that, our entire philosophy is to ensure that a significant portion of the input gains gets towards investing behind key drivers of growth as well as pricing. So next year you can expect A&P in the region of 12.5 to 13.
Okay, let you go on that note. Thank you so much for taking time out and joining in, giving us a view on how things have shaped up for Marico and what the outlook is going ahead. Well, we're just... the markets continue to look a little bit flat at this point in time, rather with a downward bias. You've got the Sensex down by 140 points, 78.12 on the Nifty right now. Mitesh Thakkar.